Good evening, ladies and gentlemen. Well, today's price action may cause quite a bit of people to panic and flip out, and people were doing so. But today's video, we're going to ease those panics and fears and talk about the opportunities that can come from pullbacks in the market on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and market analysis. So go ahead and hit that thumbs up. It's greatly appreciated. Let's get into it. Alrighty, welcome back everybody. So the 11 sectors over here that make up the S&P 500 were all down substantially on the day. And this is despite seeing Nvidia take off to the upside. In fact, actually, this is like one of the only stocks in the S&P 500 that was actually up. All right, not literally, but it's pretty much the one that performed the best. Now, when we take a look at the market view here, you'll see on today, there's a few different areas in the market that were up, and you'll notice the TNX, CGI, and the dollar, right? So the 10-year yield and the dollar were up, and we know from history and from prior videos going over this, when we have a rising 10-year yield and a rising dollar, it hasn't been all too good on the markets, and you'll see everything else here from high yield down to BITO was in the red. And even take a look at the week-to-date performance over here, right? Semiconductors has been doing absolutely great, right? And even today because of Nvidia earnings, but the 10-year yield and the dollar were up from a week-to-date perspective. Today's Thursday going into Friday, and everything was pretty much red other than technology, which technology obviously has Nvidia, right? And various other components that have been performing quite well. So if we take a look at the 10-year yield absolute perspective over here, you can see that it finished up higher on the trading session. The 2-year yield finished higher too. And now we're getting questions whether or not the Fed may potentially lift rates, right? Raise rates, or, that they're going to be holding rates higher for longer. And the market is starting to price that into the market, saying basically, there was 6 rate hikes, rate cuts, in the market. And then there was like 4, then the 3 or whatever. Then there was 1, and then there's 3, and then there's 1 again, right? So they keep going back and forth, but yet from what we're hearing from the hawkish Fed, it sounds like rates will be held higher for longer. So we might even have to price these out where we can not get a rate cut this year. And I think that has to be a potential. Now, given the context of this chart over here, you can see the federal funds rate in red, right? And you can see that's above the 2-year yield. And the reason why I'm showing you this is because you'll notice that throughout history, right, in the 2000s, and then 2006, 2008, and then even over here going into the pandemic, you'll notice that the federal funds effective rate in red went through a pause cycle, right? A pause after the rate increases when not too far after the 2-year yield dipped below it. So you see it dip below it, we went to pause, it dipped below it, we started to pause, we dipped below it, and now we're starting to pause right here too. And when the 2-year yield started going down, you can see that the federal funds rate effectively followed. And with the 2-year yield going higher on the day and potentially more into, we'll see how it goes, but that could just tell us higher rates for longer, where the Fed will keep them where they currently stand. And we're kind of seeing that here in this curve. So nevertheless, it doesn't mean necessarily that will be rate hike increases, right? I think that there's more than a 0% chance of that, but not like a 50% chance or a 40 or even a 10% chance, right? All right, let's take a look at the dollar. And the dollar also was up on the day. And you can see here, when we see the strength in the dollar, you can see the negative correlation in the markets, right? So the dollar weakened over here and the markets went up. Now we're starting to see the market kind of move higher, and we're getting the market to pause out and pull back slightly. There you can see in October of the prior trading year, when it topped out and started moving down, that's really helped out the S&P 500 start to move up higher. And the same thing actually happened with the 10-year yield in October when that dropped too, right? So we had a falling yields, right, in October of 2023 and a falling dollar. And you can see right there, the S&P 500 really went moving, okay? Let's go ahead and look at now the index. We're going to look at the Russell 2000, the NASDAQ 100, and the S&P 500. We'll start off with the Russell 2000 because we haven't talked about this one for a while. And really, I'm just calling out here, this one's been a very difficult one to trade because it's one well off the all-time highs. and it's been going sideways for quite some time here once again. So now we're starting to see a little bit more volatility, right? Volatility was reduced for the most part where we saw these small range candles moving up. Well, volatility entered back in today, and I just anchored a volume weighted average price from the low of this prior swing, and you can see price is still holding above that level. It's held above it a couple of times here, so we'll see if this can hold again. But overall, so far what it seems is when price comes down to the 190 range, it looks like traders are there ready to buy, and when it comes up to around the 210 range, you can see traders are looking to sell. So what does this tell me? It just tells me it's range trading. So what can you do? I would say anchor a volume weighted average price from these prior swing high, and we'll see how price can move around it and it eventually breaks. That could identify a potential move higher, and then we could put a stop on the next swing. So it may still come down. We don't know where it's going to go exactly, but wherever it comes, you can potentially watch to see that when strength enters back in, it could create an opportunity, because this could just be a very, a subtle pullback to eventually break the 210 level and start moving higher. And we got to keep an open mind for that, just like we have to keep an open mind for if these break, right, and they head down into these lower levels. If you take a look at the 15-minute time frame, this is actually interesting. So this is the upper month-to-date week expected move. So upper monthly expected move, that's based off of implied volatility. We've been trading above it, for quite some time here. This is the 15-minute chart, but we finally broke back within it, because there's always a higher probability that we trade back within these expected moves. And as it stands right now, we're actually outside of the weekly expected move to the downside, and we broke the month-to-date anchored volume weighted average price. So this is getting pretty extended. So coming into tomorrow, right, it's Friday, and on top of that, we're going into a holiday weekend. So I don't know if it's going to be some sort of a high volume day. Like, traders can really move markets on these going into holiday weekends. I don't expect all too much, but we shall see. But if it isn't too much, they can potentially grind it right back up into and around the upper weekly expected move back in to the weekly, expected range there. Okay, so keep that as a potential in your back pocket. Now, if it starts heading down, take a look at the daily expected move at 201.46. Let's take a look at the NASDAQ 100. The NASDAQ 100 on the daily time frame looks pretty similar to the S&P 500. There's a tight correlation. Today, we gapped way up higher on those Nvidia earnings, and we closed near the lows of the trading session. But the reason we say don't panic is really because, the market's been a one-way ticket up, and all we're doing is seeing a little bit of volatility. Yes, this is known as an outside trading candle, right? Where you're above the high of the previous candle and you went below the low of it and it closed pretty bearish. So, call it a outside reversal candle, a piercing pattern, a dark cloud coverage, call it whatever you want. It can mark potential reversals. Now, if we reverse, the question then is, okay, well, where can we start to look for potential dip opportunities? And the dip opportunities, there's quite a few of them, okay? And I'll show you where the expected moves are and all that stuff momentarily. But right here in this range, you can see there's a lot of matching highs in this kind of area right here. So if I drew that across, right, when we see this gap up through this level. So if price were to come down here and all of a sudden start to come back up and find strength, what I do is anchor a volume weighted average price to the swing high, right? And if price comes down into this range and eventually breaks out, then I'd have an idea of where to enter and where to place a stop if I want to trade the trend continuation to the upside. Now, if it breaks it, right, I would still hold the anchored VWAP, but I'd be looking now at the prior swing low anchored VWAP and the prior swing high, which is kind of in confluence down here at about 435. And that's where I'd kind of hone in on to find some strength after that and see if the market wants to start moving up higher there. Now, if we take a look at the 15-minute time frame, we're below the 5-day moving average, very similar to how we were in the IWM. And you can see it's starting to decline here, right? So it's bearish, but doesn't mean that, it's not overextended to the downside where we can snap back. And if it's still declining and price gets above it, it's bullish, but with caution, given the context of the change in direction of that average. Okay, so we're below the 5-day moving average right now, but it in theory is still actually inclining as it currently stands. So this would be bearish, but with caution, because these things can rip literally right back up to the upside, given the context of really we're just kind of trading, we're really just trading sideways. And this is where, we closed in the prior week, right? We closed right here on last week, and we're still above those areas. We actually, in fact, came into that high, and we bounced from those levels today. We're well within the weekly expected move. You can see we gapped outside of it today. So the higher probability is that we come back in, and we did. We came back up and we got rejected from that level and pushed back down. So the market's doing what the market anticipated it was going to do. Okay, the 5-day moving average is starting to neutralize. So if price action goes up, comes in, chops around, heads back down, creates a new a lower high, lower low, right? Then the trend could be potentially changing. But as it stands right now, it's not really a time to start freaking out in this current context of the NASDAQ 100. It's a time just to be prepared and to be patient. S&P 500 on the daily time frame. Let's take a look at that. So we talked about this one yesterday along with a lot of different indicators that showed that the market was, could be very well finding some sort of a top or a period of digestion. And we saw some of that play out today, right? So we gapped up, we closed lower near the lows of day. But we're well within the weekly expected move. So the market's doing what the market anticipated. Now, a couple of levels to watch if we get further downside could be very well the prior swing high over here, right? And that would be in line with the lower weekly expected move on the SPY. And remember, there's always a higher probability that we tag one of these levels, which we discussed on the prior episode. And there's always a high probability that we close within it, right? Higher meaning, right, 68% of the time we close within the weekly expected move. Okay, that's what that means. Now, if we get further sell side as time progresses, I still want to pay attention to this prior swing high anchored view up and prior swing low anchored volume weighted average price. And even if it comes in and doesn't tag those levels, like I said, you can anchor volume weighted average price here. And when price starts turning back up and getting through that, it'll give us an idea of where we can have a stop, where we can have an entry, and where we can follow the trend. And by trend, I mean the 5-day moving average here on the 15-minute time frame. Okay, so now let's get in a little bit dive a little deeper here, blah, 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 in the SPY on the 15-minute time frame. So now, as we started to get this weakness, right, we're still off the weekly expected move. We still haven't even tagged the upper, we haven't came back into the upper month-to-date expected move. So we're outside of what the market anticipated as far as risk goes for the month. Now, coming into tomorrow, the lower daily expected move is at 522.83. So that'd be right outside of the weekly expected move in this area. Okay, that's always a possibility. And we're still above the month-to-date anchored volume weighted average price there too. Now, as it stands, there are a couple interesting levels on the chart. The 5-day moving average is starting to flatten out to neutralize as we're below here. So this is bearish, but with caution. Given the context, it's still rather neutral. Now, if it comes back up, price comes back up, the daily expected move to the upside is 529.09. And we have this 527.68. So this kind of zone in here I highlighted because you can see the prior times that we've had the market bounce into these levels, we found some pretty significant moves from them. And you can even see right into these areas too, and it acts as a little resistance, even a little support line right there. So this zone right here could be potentially resistance. Not only if price comes up here, but we have the swing high anchored VWAP, we have the week to date anchored VWAP starting to decline, and we have a declining or potentially declining 5-day moving average if we come back up within these areas, okay? So this, right, once support is broken, it can become potentially resistance. So to be more bullish, right, if you're more bullish and you think that price is going to come back up here, it's always important to see us break through these levels and the 5-day moving average to start to turn back up here too as well. Okay, now let's take a look here at some gamma levels. There, as we stated, we're below the 5-day moving average on these charts, which puts us into a kind of a bearish market condition. At least if you're a swing trader, you typically get a lot more fake outs and shakeouts. And then we're also in negative gamma territory, right? So when we're in negative gamma territory, this is where sellers, selling but gets selling, buying but gets buying, you get much more volatile swings. This 5,300 has been a very important level, right? We've broken from it. We talked about this on prior episode, how it's hard to get from this 5,300. We started breaking from it. We came back in. Traders started reaching up to 5,400 to make the new call wall. Today in the early trading session, we came up to 5,350 on the nose, and it got rejected. That was the other big level, gamma level, to watch out for. And as we came back into 5,300, we bounced, but we fell sharply through specifically that level. So going into the trading session tomorrow, if you're in the Discord, I'll be updating the gamma flip line because that may change. As it stands right now, 52.80 and prices below it. We're in negative gamma territory. We're below a 5-day moving average. We're below that 5,300. In yesterday's video, I stated I'm bearish under 5,300, but I'm more bullish above 5,300 as traders reached out to 5,350 and 5,400. So right now, it's not really necessarily a time to panic. It's a time to pump the brakes, be cautious, and be cognizant of how market conditions are currently changing right now in front of us. And we'll feel a lot more better, a lot more confident when they start to change back into a much more bullish tone. That's all I got for you on today's episode, everybody. Hope it helps out. See you later.